Welcome to another episode of the Inappropriate Growth Podcast. Today, we have a special guest who is a true champion for small business owners, Andy Farrell. The founder of Farrell Financial joins us to share his wealth of knowledge and experience in helping entrepreneurs gain financial clarity and peace of mind. Andy has guided countless business owners through financial challenges, helping them make informed decisions to improve cash flow, profitability, and achieve financial objectives. Get ready for an insightful conversation packed with actionable tips and strategies that will resonate with every small business owner out there. It's time to dive in. Let's get inappropriate. Welcome to today's episode of the Inappropriate Growth Podcast. I'm Paul Angelle, your host, and today we have Mr. Andy Farrell. Andy Farrell owns Farrell Financial. And Andy, why don't you tell us a little bit about where you are and how you got there?
Sure. Yeah. So I'm out of Richmond, Virginia. I was born and raised here. Went to school over at Tech in Blacksburg, but I've been in Virginia my whole life. I do love to travel and check things out, but this is home. So this is where I've been.
Well, you mentioned that you did a little touring, living on a school bus.
My wife, she was my fiance at the time, but we kind of took full advantage of the COVID remote situation. And so we bought a school bus that was partially converted and did some extra work to kind of build out the bedroom and some other things, and we took it coast to coast, and we were on there for about a year. It was amazing.
Why don't you tell me a little bit about your background and what inspired you to start Farrell Financial?
Yeah, so studied finance in school and came out and started my career in commercial credit underwriting. So for middle market businesses. So if a small business needs some kind of loan or line of credit or some other kind of capital, maybe they're doing an acquisition, buying a fleet of vehicles, whatever it might be, my team would do the underwriting and kind of determine creditworthiness, the risk of the loan and the pricing of the loan and all that stuff. And so we would work with our relationship managers to kind of get a package together and get them some funding. And then from kind of the credit underwriting, went into more traditional corporate financial planning analysis or FP&A. Worked in a card business, a credit card business, and then went to a tech company too, big financial tech company, and did business case development. And so we would have a big pool of capital, and it was part of my job to develop the business cases for these different software products that we would sell. So, what's the product? Who are we going to sell it to? What's the pricing going to be? How long is it going to take to develop and launch? All this kind of stuff to put together a full financial picture to help our executive leaders kind of make investment decisions. It was great experience, and I learned a lot of different skills, which really set me up to be able to serve small business owners. So that's really where my passion is helping small business owners and entrepreneurship. I've always been interested in it myself, and those types of people that are willing to make the jump and take that leap. I really admire them, and I want to help them along their success journey. And so, most small business owners have bookkeepers and accountants, and that's kind of the scope of their financial management. But where I sit is kind of a CFO service. It's a more operationally focused kind of financial management role, where bookkeepers and accountants tell you what happened, and then someone like me comes in and it takes that data, takes that information, and says, okay, this is what it's telling me about your business. Where do you want to go? And let's put the plan together to kind of help you get there. What needs to happen in your business for you to achieve those goals? And then once we've got that, we track to those goals every month, and then serve as a strategic partner to sort of come up with any action plans that are needed to kind of right the ship to get someone back on track.
I talk to a lot of business owners and business consultants and coaches. A lot of entrepreneurs have no trouble when they're coming from marketing and sales, making this leap of faith. I'm usually really, really interested in the financial professionals making leaps of faith, because it's a different mindset usually. What were some of the biggest challenges you faced when you first started your business, and how did you overcome them?
One was just kind of drumming up the courage to make the jump, right? So that's certainly part of it. there is not as much entrepreneurial umph in like financial kind of careers than it is like sales and marketing, like you said. So that was part of it. Was just coming up with the courage to do it, which I'm so glad I did. It was well worth it. And then once I kind of made that decision and made that commitment, it's just like anyone else, right? It's a lot of you know, client acquisition challenges. You know, how do I get in front of the right people and have the right conversations? And then for me specifically with this kind of business and this kind of service, you know, a lot of small business owners haven't heard of like CFO services or sort of you know, FP&A, financial planning and analysis type of skills or role. And so it was a bit of an education to say, hey, like I know you have an accountant and a bookkeeper, but you know, this role takes that and actually gives you advice on how to operate and kind of helps you know where to go. So there was like an educational component to these conversations with small business owners. So,
All right. Well, can you share any significant milestones or maybe a turning point in your career that had a major impact on the business as it sits today?
yeah, I mean, I think, you know, like we talked about earlier, you know, I'm still in business building mode, right? Still in growth mode, client acquisitions, and getting that critical mass of clients. But you know, so I would say at this point, the kind of the turning point would be those moments in my career where I knew I had to make a change, where I knew I had to kind of do something for myself. So, you know, there was just moments in my career, you know, with, you know, the corporations that I worked for where it was just obvious that this wasn't quite the right fit anymore. And so that was like a big turning point. So it was like, okay, are you going to just, do you want to be a VP of finance and like grind to get to there? Or do you want to grind and build something of your own? And so, like I mentioned before, those are the folks that I admire the most that are able to do that and willing to do that. And so I decided that I wanted to be among those ranks as well. And so that was, for now, the big turning point was, you know, those moments in my career where it was obvious I needed to do my own thing. So,
Can you share a success story then? Maybe a client who faced a significant financial challenge or was about to make a really good or really bad decision. Maybe
yeah, yeah,
your nagging helped
yeah.
them turn things around or avoid a catastrophe.
Yeah. So, yeah, you know, I'm working with a wellness business out of Baltimore right now. They do you know, group coaching, private coaching. They've got massage, PT, and so kind of like an all around kind of wellness facility. And you know, they're growing, they're doing well, but you know, right now their focus is on client acquisition. But they came to me with, you know, an exciting opportunity. They thought to kind of add a couple different, invest in a couple different features for their facility that would sort of enhance the offering and then the experience with the members there. Um, so I got the details from them. I was a little worried about it at first. I got the details from them. What exactly are you going to do? How much is it going to cost? You know, how much are you going to charge? So very similar to some of the business cases I did previously in my career. And it became pretty obvious that if they were to achieve kind of their revenue targets and their client membership targets that we had already set in the previous meeting, and they made the investment, then their cash balances would have been dangerously low, I guess you could say. And so it allowed us to kind of look at the numbers objectively and say, hey, if you do this like next month, then you know you're really at risk here for the year of needing to take on more debt or needing to put more cash into the business or raise money. So why don't we like hold off on that and refocus on what we've already talked about you should be focused on, which is kind of the client acquisition funnel and the sales and marketing funnels.
Right. Well, having a financial partner and implementing financial controls and knowing your numbers and stuff,
Yeah,
it I could see where it could be a buzzkill for
sure.
entrepreneurs with shiny objects,
Yeah.
but you could really save somebody a lot of pain and grief by, being the being the adult in the room when it comes to financial reports.
At the end of the day, you know, they're the operator, they're the business owner, and they can make those decisions if they want. My job is to, you know, help bring that awareness to them and say, hey, if you do make this decision, these are the potential financial outcomes. And so be aware of this. And I think it's risky. I think you should focus on this. But at the end of the day, my job is to bring that awareness to them. Yeah.
All right. Well, what keeps you motivated and passionate about helping small business owners achieve financial clarity? As I know, it, anything you do, no matter how much you love what you do, it's going to become a job and it's going to become monotonous. What's the secret to staying motivated?
My career has always been around. It's always been financial related. It's always something I've been interested, even like since I was like in high school. It's just, it's just what I'm good at and what I like. So I think my career will always be around this. I think it's just something that I intrinsically enjoy. Like when I get data from a business owner, I'm able to peek under the hood and see how they're running it. It's just everyone runs it a little differently, and there's like a million ways to make money, and it's just fascinating to learn about how people do it. So that's one thing for me. And then the second piece of that is, helping business owners in this way. First of all, I've already mentioned it, but like those are the types of folks I admire that take risks and bet on themselves and go and take a chance to create something of their own. And so I just enjoy working with those folks, and it's really fulfilling just to have an impact on their business. And when you have an impact on their business with these types of owners, it's you're impacting their lives too, and you're making them better. And it's just a fulfilling thing that I find that is something I can just will I can't imagine doing anything else, at least at this point. And so it's one of those things. I'm working with someone I respect and admire, and I just want to be part of their success.
I'm
Yeah.
looking under the hood in a lot of small businesses. It's not typically I delegate financial to vendors and stuff like that, but I run into the exact same advice over and over and over again. In your experience, from the angle you're coming in, what are the most common financial pitfalls that it seems like almost all small business owners really should avoid, but they all seem to do?
I think the first thing is the general lack of awareness that most of these business owners seem to have, unless they've hired a financial professional. There's a standard kind of universal set of revenue, profit, and cash flow drivers in any business, no matter the business. And depending on the industry, some will be more important or be more important to focus than on others. But generally speaking, business owners are just looking at kind of the top line and the bottom line, and that's kind of it in terms of their the degree of their financial analysis, right? And so they don't have the time or effort or interest to kind of like develop that skill. And so I think that's the first thing. And then the second thing too is like kind of not focusing on what's most important, right? In a particular situation. So I guess getting shiny object syndrome, like the example I gave earlier is like a really good example. You know, it was like 3 or 4 months in a row where we're coming up with plans for kind of, getting more people into the door. And then they have, an investment opportunity to kind of enhance like the facility in some way that's going to cost them money and kind of put a strain on their cash. But it's like, let's not get the shiny object syndrome and just focus, I guess, on the most important thing. So I think part of it is just like this shiny object syndrome when we know, hey, we already have a financial issue over here. So let's just focus on that until it's fixed.
Now, you often talk about the difference between building a job versus building a business machine. I was hoping you could elaborate on that concept.
Yeah, I mean, most business owners, right, are working on their business. They're a performer in their business versus kind of the owner, the CEO, like the person that's like making the strategic decisions. And so, in my job is to come in and I mentioned those 16 profit and cash flow drivers, right? Like first thing is to create awareness for all of those things. And this is the first step in like, I guess, going from the owning a job versus a machine is, you need to be able to track all those drivers and understanding like who's responsible for all those things, and like how are they being affected in the business. And so from there, it's stabilizing everything and then hiring out and delegating and making sure all these different areas of your business that are driving revenue, profit, and cash flow are are documented. You have processes for it. You have delegated or hired out all of those things. But it starts with the financial awareness and all of those 16 drivers and kind of understanding all the different levers in your business. And then that way you can gain control over them. And so kind of over time, working towards basically removing you from the business.
Glossing over that's a pretty big boulder. We need to
Yeah.
have awareness, because if you're talking to an entrepreneur, depending on how mature they are financially, it's not like switching a light bulb on.
Oh
Because
no.
I've found, just by getting them to be aware of numbers or metrics or conversion percentages, or revenue percentages, or cost of goods sold, just different types of financial things that, if they would have got an MBA, they would understand and know about, but they just decided to hang a shingle and start doing business because they
Yeah.
were good at it.
Yep.
It's monumental. I usually joke, okay, after we work together a quarter, that first quarter will be a train wreck and a dumpster fire.
Yep.
The second quarter, it'll be either a train wreck or a dumpster fire,
Yeah.
but not. And then the third week, we're lacking some integrity and consistency in the number, but we've understand the process and we're implementing systems. By the fourth quarter, they've delegated it. We come into the next year and it's been automated and outsourced,
Yeah.
and it's real time, and there's a dashboard, and they just know the numbers and they know why they're supposed to know them. But it's to me, I've always seen it's a big boulder to move.
It's certainly an evolution, right? And
Absolutely.
and they often have to like change as entrepreneurs fundamentally to like get there, which is going to be very difficult and take time. And so that's why I like to work with folks long term. I have a prospect coming on, and he's interested in selling his business at some point in the next 4 years. I'm like, that's perfect runway. We've got plenty of time to like totally like get you ready. But sometimes it takes like I mean, it can take multiple years. It could take a couple years for him to like, based on where he's at, to really get it to a place where a buyer could come in and not have to be a pest control expert to be able to buy this business and run it. So yeah, it's definitely an evolution. And he's interested in selling his business, but he's not ready yet. But he doesn't want to do it for the next like 2 to 4 years. So I'm like, okay, this is great. We got plenty of time to kind of work towards this. But it's going to require him to like he's been running his business this way for years, like a lot of business owners have, and sometimes it just requires like fundamental change in like how they do
What
things.
you're describing, an avatar that I never considered until they started popping up, because as we get closer and closer to our retirement years, our brain turns into a steel trap, right? Nothing gets in, nothing gets out. And everything is in our head, especially when it's a small business. But in
Yeah.
order for someone to see value in it, even if you're going
Yep.
to give it away or you're mentoring someone, the what's valuable is that client list and the interaction with your database and your systems, and your CRM and your policy, systems, procedures, your handbook, all these things that small businesses avoid when it's a small group of people and everybody knows their role.
I think small business owners, and this, I'm sure, need to understand too, is if you have that key man risk in yourself and all the procedures and policies are in your head, it severely diminishes the value that you could possibly get for selling that business. It's going to be
Also very risky for the business. If you've ever,
really,
I worked with estate planning firms who had like widows. Their spouse, husband, great provider, had a trucking company.
yeah,
He died of a heart attack suddenly. They couldn't make payroll. They lost their company in 3 weeks. It
yeah,
was a company that produced seven figures for years and years and years, and couldn't make payroll. Had to just go out of business.
yeah.
That's terrible, and it's a risk, and it's one of those things that you want to mitigate, even if you're not trying to sell. But yeah, when it's time for a secession,
Yeah.
it takes it. All right, you talk about sources of money, and you said there are three sources of money for any business. And what to you, what does that mean? What are they, and how can business owners effectively leverage them?
Yeah. So, three sources. Number one is cash flow from the business from operations. This is the best. This is the best that best source of money that you can have. You also have debt financing of some sort. So an influx of cash into the business from some sort of loan or working capital line or something of the sort. And then the last source, of course, is additional investment. So whether that's raising money or the owner having to kind of put some kind of cash injection into the business for some reason. So those are like the three sources of cash for a business. Obviously, the ideal situation is everything is able to come from operations, at least like just ongoing, right? And maybe even fuel some growth. Um, So that's like the first thing to address is let's make sure the cash from operations, so cash flow from the business, is strong and growing, and stable. Now, there's probably situations where those other two come into play even when number one is taken care of. So maybe there is an opportunity for acquiring a smaller competitor. You want their client list or that territory or whatever it might be, or you want to take on, for similar reasons, equity investors. Bring on folks to maybe help run the business, or some kind of strategic partner. But what you want to avoid is using, I guess, the second and third source being debt and additional equity, or additional owners' cash into the business. In your bad situation, I suppose, or a tight situation where we're using those two to fund like working capital, to fund like continuing operations. So to make payroll or to make rent or something like that. So like, so that's those are the three sources and sort of situations, I guess, where you might use different ones. But always priority number one is make sure you understand and can stabilize and grow cash from operations. Because if you do that, most of your problems will be figured out, at least financially.
Seems obvious, but it's hard to see things like that when you're stuck in the weeds of a small business.
Sure, absolutely.
All right. Well, you're a planner, I'm sure. What are your plans and expectations for Farrell Financial in the next few years?
Yeah, I mean, so eventually I want to. Right now, I'm pretty industry agnostic. I will help anyone that needs help, or that could use it from me. I want to definitely kind of find my own lane in this industry at some point. I want to let that niche find me. I know you mentioned law firms. I know you went to law school. I don't have a specific sort of niche like that, but I would like to kind of hone in on that. And I just want to start building a team at some point too, and kind of expand, my reach and my ability to help folks. And so, short term, it's really just kind of staying out there in the community and the business community and building relationships and kind of just helping small business owners as much as I can, and then of course bringing on bookkeepers and accountants. So I think in the end, what I want is a full soup to nuts financial management firm. So we can take care of tax, we can take care of bookkeeping, accounting, and kind of the operationally focused CFO services. But that's in the future. We'll see. We'll see how I'm going to get there. But that's the vision for Farrell Financial for sure.
Still speaking of the future, what do you expect the future is going to look like? I mean, things change quickly. Financial risk assessment wasn't as quick as it is today, just 10 years ago.
Yeah.
What does the future look like? You're an insider. What could people expect?
I think it'll grow a lot. At least the types of service providers that are doing what I do. Like there's not a lot of them, but the need is absolutely there. So I really expect that more people will start to kind of play into this space. And I think accounting firms and bookkeeping firms will probably try to figure out a way to kind of, I don't know, I guess, kind of tap into this service, because there's a demand there, and I think people are going to kind of need this service. I also think technology, right now, a lot of how I do things, and I think it's because again, there's not a ton of operators here, so there's not a lot of demand yet from like tech companies to kind of create a solution. But a lot of it is Excel modeling that I build. It's like a standard template, and then I like export QuickBooks data and drop it in and organize it every month. But I think there will be tools that come into play for like smaller businesses and lower middle market businesses that kind of can aggregate this data in a way that would help someone like me kind of tell the future. So I think tools will change, and I think we're going to see more service providers providing CFO services, whether it's a CFO services shop like mine, or expanded services from existing accounting and financial services businesses. But we'll see. I'm not, we never quite know what the future holds.
If we knew exactly what the future held, we would all be billionaires. Or what advice would you give to aspiring entrepreneurs who are just starting out and looking to gain control of their finances?
So the first thing is really step number one is I would hire a really good bookkeeper. That's the first thing I would do. I know it sounds boring. I know it sounds boring.
Usually when they don't have a bookkeeper, that is usually, I was like, all right, we're going to stop the call now. Call me back when you have the bookkeeper in place.
I had a conversation like that recently with someone who I met at a networking event. He's like, "Oh man, like this sounds great. Like let's have a conversation." And he just sent me an Excel sheet with all his transactions on it. And I'm like, "Okay, first things first. We need to get the data under control, because if we don't have the data under control and understand everything that's moving in and out of the business, then we can't do anything. We can't make predictions. We can't make a forecast. We can't run any analysis. So like, first things first is just get a good bookkeeper, and then an accountant. So from there, then I think it's or do you want to educate yourself on kind of the different elements of the P&L? And it could be basics. It could be like, all right, now you know what revenue and cost of goods sold and like some of the different operating expenses are. So that's the second thing I would do. And then really what I would say is just really always keep a close eye on cash and cash balances if you do anything. You know, that is like the number one killer, is not planning accordingly, and all of a sudden you're out of cash, and then you have to tap into those other two sort of number 2 and 3 sources of cash in a business or money in a business, which is additional debt or putting more of your own money back into the business. So just really keep a close eye on cash balances always. And then really, I think, obviously I'm going to say this, but I would try to find a financial professional that kind of knows how to forecast and how to understand the drivers in your business. So that way you can kind of get a shortcut. It's a long road to teach yourself this kind of thing. And so there's more important things for a business owner to do that they're kind of uniquely qualified to do in their business. So I'd say hire a financial professional to help.
I've talked to people about, what a chief financial officer would do in a company. And my experience is that the companies who would benefit the most from what a chief financial officer would do, the financial controls, the strategy, the tactical, who does what by when, all that stuff that a C-suite person would do. The people who need that the most are the people who are in absolutely no danger of covering a $200,000 salary, because CFOs are not cheap.
Yeah.
And that's why I think there's a growth. It's relatively new, but there's this growth of this whole idea of fractional CFOs.
Yeah.
Where you bring in a strategic partner, strategically making the goals match the financial reports, and then having that accountability and that coaching and that constant activity. That's who needs it the most.
Yeah.
I mean, in my business coaching, I find that the people who need me the most are the ones who can't afford it. Make a fractional CFO, maybe you can afford 1/20th of a CFO.
Yeah. Yeah. Absolutely.
In a small business, the CFO does not have a full-time job.
No.
Once you get to the end of the reports, it's back to Facebook, or what else are you going to do if it doesn't have, we don't have like international teams, and we don't have, mergers and acquisitions. We don't have any of that stuff.
Yeah.
But the basics that the CFO does, and those, like I keep saying financial controls, but I mean the triggers and everything that's in place that protects your cash position, that protects your future earnings, that keeps you using the good money and not the bad money.
Yeah.
That's I think that's invaluable. And I see that as a growing industry. And a lot of this stuff is growing ever since COVID. There's less big warehouses where you get all your services from. Everybody's an affiliate of everyone.
Yeah.
And fractional services are really in growth, in just about every sector that I've seen.
Yeah. Yeah, absolutely. And yeah, I mean, you're right too, right? Like some of these small business owners that don't need a CFO, fractional is a good way to go. And even if they don't want the full service, right? Like if it's not the strategic partnership stuff, at least find someone that can kind of put together those insightful reports that allow you to see where you're headed. Like if you perform in the last half of the year, like you did in the first half of the year, this is where you're going to end up. Like at least just some of those basics. Would be just...
Yeah, and not every forecast is bad, because sometimes you have to seriously think, okay, heaven forbid the marketing we just paid for works.
Yeah.
Then what? What does the business look like with 3 times as much revenue and 3 times as much?
Are you ready for that? Right? Like that's another question. Yeah.
That's what I mean by having those financial controls. This is when we hire.
Yeah.
Click. When these three things are met, pull the trigger, because it'll be too late if you wait.
Yeah.
Well, all right. Well, Andy, thanks so much for joining today.
Appreciate
I learned a whole bunch of stuff. I liked it a lot. And to our listeners, thank you. And remember, if you're going to grow, chances are you're probably going to have to do something inappropriate.